Tax rate statement. Mount Pleasant Elementary School District General Obligation Bonds, Measure T. An election will be held in Mount Pleasant Elementary School District, the district, on November 5th, 2024 for the purpose of submitting to the electors of the district the question of incurring bonded indebtedness of the district in the principal amount of $24 million. If such bonds are authorized and sold, the principal thereof and interest thereon will be payable from the proceeds of taxes levied on the taxable property in the district. The following information regarding tax rates is given in compliance with Section 9401 of the California Elections Code. This information is based upon the best estimates and projections presently available from official sources, upon experience within the district and other demonstrable factors. Based upon the foregoing and projections of the assessed valuations of taxable property in the district, and assuming the entire debt service on the bonds will be paid through property taxation. 1. The best estimate of the average annual tax rate that would be required to be levied to fund the bond issue over the entire duration of the bond debt service, based on assessed valuations available at the time of the filing of this statement, or a projection based on experience within the same jurisdiction or other demonstrable factors, is $25.59 per $100,000 of assessed valuation of all property to be taxed. It is estimated that the final fiscal year in which the tax is anticipated to be collected is fiscal year 2053 to 54. 2. The best estimate of the highest tax rate that would be required to be levied to fund the bond issue, and an estimate of the year in which that rate will apply, based on estimated assessed valuations available at the time of the filing of this statement, or a projection based on experience within the same jurisdiction or other demonstrable factors, is $28 per $100,000 of assessed valuation of all property to be taxed for fiscal years 2025 through 26, through and including 2049 through 50. 3. The best estimate of the total debt service, including the principal and interest, that would be required to be repaid if all the bonds are issued and sold is approximately $42 million. Attention of voters is directed to the fact that the foregoing information is based upon projections and estimates only. The actual timing of sales of the bonds and the amount to be sold at any time will be governed by the needs of the district and other factors. The actual interest rates at which the bonds will be sold, which will not exceed the maximum permitted by law, will depend upon the bond market at the time of sale. The actual assessed valuations in future years will depend upon the value of property within the district as determined in the assessment and the equalization process. Assessed valuation is not the same as market price of real property. Therefore, the actual tax rates and the years in which those tax rates will be applicable may vary from those presently estimated and stated above. Voters should note that estimated tax rates are based on the assessed value of taxable property on the county's official tax rolls, not on the property's market value. Property owners should consult their own property tax bills to determine their property's assessed value and any applicable tax exemptions. Dated May 28, 2024. Elida MacArthur, Doctor, Superintendent, Mount Pleasant Elementary School District.